Hey, happy Friday, everybody. This is Joshua Phillips, Churchill Mortgage, coming to you with another market update. It is Friday, November the 22nd. Boy, we are just a few days away from Thanksgiving. Happy Thanksgiving to you and your family. I wanted to come to you with a market update today. So we always like to start here. Let me switch over here on my screen with a little headline from CNBC. So this headline from yesterday says homebuyers are accepting higher mortgage rates. And this is from Compass. That's a real estate company, CEO of a real estate company. You know, and I hate to say it, that's just the reality. You know what I would love to be able to do is I'd love to be able to come on here and say, yes, mortgage rates are improving. But the reality is they're not. But I will say they are stabilizing. Not nearly as sexy and exciting, but as we've been saying the last 3 or 4 weeks, we have hit a level where I think we're just really been stable the last 3 to 4 weeks. Rates really haven't gone up. Rates really haven't gone down. They're kind of hovering around 7%, give or take a little bit, and you can buy your rate down lower, certainly into the 6s, depending on the situation. So, so let's switch over here to our mortgage-backed security chart. As I always say, every mortgage professional in America has this screen up. This is mortgage-backed securities where mortgage rates actually derive their value. And all you need to really know, these are Japanese candlesticks, is that green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And we've talked about, if you watched these videos in the past, you know we saw things get better and better and better up until mid-September. And then after the Fed cut, mortgage rates went up about 3/4 to maybe as much as 1%. And we really kind of haven't recovered from that increase in rates over the last 2 to 3 months. Now, what we have said is the silver lining here is what we call a floor of support right here that we're seeing at this kind of 100.5 level, where we just kind of hit this level over and over and over again, bounce the last 2 or 3 weeks, and and it's held. So the good news is, doesn't look like hopefully mortgage rates are going up. The bad news is rates have not been going down either. They've just been steady. Maybe that's a good thing. And as that article was saying, home buyers accepting higher interest rates. I mean, I think we have to accept the fact that rates are hopefully going to come down in 2025, but it may be very slow. I guess, if you'd asked me 3 months ago, I say, yeah, maybe rates are going to dip into the 5s later in 2025. I'm really not feeling that now. I want to be positive about it, but it seems like hopefully we'll just be kind of somewhere in the 6s, maybe drifting down into low 6s. And if I'm wrong and rates shoot down, that's amazing. But I think if you're thinking about buying a home in 2025, I think you just need to mentally be prepared for rates to stay somewhere in the vicinity where they are now, and hopefully moving slightly lower as we go through the year. Of course, there's always economic data coming out. We don't know what the Trump administration is going to do with the economy, with this idea of tariffs. We've got escalating, conflicts in Russia and Ukraine and Israel and Palestine. There's a lot going on in the world, and so it's really impossible to say. If you're a client looking to refinance, or anyone looking to refinance, I just think, unfortunately, we're just going to be in a hold for a little while we wait for the right opportunity, because there is closing costs associated with refinancing. You don't want to jump in too soon, pay too much too soon, and then rates are better in the future, and you've kind of wasted your money. So I would continue to caution you to be careful. So anyway. Hey, again, I'd love to be able to come to you. I hope someday in the future I'll be able to come to you and say, hey, rates are improving. We are kind of narrowing in. You can see that red line is the 25-day moving average. That has been our ceiling. And we are just getting narrowed. And it is going to break out one way or the other. We're either going to break down and break, into seeing higher interest rates, or maybe we'll finally break back above the 25-day moving average, which we've been below since, right around that, since October 2nd, we have been below the 25-day moving average, and it'd be great if we could get back above that. So anyway, hey, have a great Thanksgiving. I am working as needed next week, so please reach out if you have a need. If you're thinking about purchasing a home, you want to talk about qualification, I am here to help. Just send me an email or text and we'll connect and get you set up. Take care. Bye-bye.